We've been waiting on it, and now it's finally here. The first new product from ARK Invest in 2 years. Will ARKX live up to the hype? Will Cathie Wood be able to capture the space economy revolution like lightning in a bottle? Will ARKX perform as well as her other ETFs? Only time will tell. We could not pass up on buying this ETF last Tuesday. We view ARKX as close to a sure thing to make some money than any opportunity out there right now. Granted, at first glance, it doesn't look like they are rolling the dice very much on stock picks, but rather going conservative. We will discuss the reason behind that here in a minute. We will also take a close look at the top 3 ARKX holdings in this video and explain why some obvious stocks seem to be missing. Our team at MoonShot Money have been waiting since the announcement, and ARKX seems to be the perfect ETF for us. This is the MoonShot Money channel. I'm Chase Vickers. Are you ready? Let's go. Welcome back, and thanks so much for watching today. We hope you enjoy this video. If you don't mind, take a second to give us a thumbs up. It really does help us grow the channel and helps get us out there in front of more viewers. Follow us over on Twitter at MoonShot Money 1 for important retweets and thoughts from our team. ARKX, the Space Exploration Innovation ETF, which is actually Cathie's 8th ETF, debuted Tuesday, March 30th. On a side note, an increasing number of private space companies are preparing to go public sometime in the next 12 months. And in the past 180 days, 7 companies have entered into SPAC deals to go public. Space companies are popping up everywhere. The ARKX top 10 look a little unusual at first to us as well as a lot of other people, but we will try to explain shortly. Some of the top 10 holdings that we mentioned in previous videos in some highly anticipated stocks are strangely missing. Here is ARKX's top 10 holdings. Trimble, ARK's 3D printing ETF, Kratos, L3 Harris, JD.com, Komatsu, Lockheed Martin, Iridium, Thales, and Boeing. Let's take a quick look at the top 3 because these are considered ARK's top tier holdings. Number 1 holding is Trimble, ticker TRMB. Trimble is one of the leading providers in advanced location-based solutions for construction, agriculture, and civil engineering markets. Here's the key. Trimble would be one of the companies that would benefit from the increased amount of data collected from GPS satellites. It has strong fundamentals with positive earnings and assets greater than its liabilities. In other words, stability. The number 2 holding is 3D printing ETF, ticker PRNT. PRNT is an ETF following an index designed to track companies' price movements in the 3D printing industry. The 3D printing world is still small, so instead of investing in numerous 3D printing companies, they decided to invest in the whole market. Again, stability. The number 3 holding is Kratos Defense and Security Solutions, ticker KTOS. Kratos is a defense company working with the United States and its allies for national security. Kratos supports around 80% of space missions and one of the leading providers of affordable, high-performance, tactical jet-powered drones. Easy to see why ARKX has it as one of its top 3 holdings. It has strong fundamentals and positive earnings, strong forward guidance, and cash greater than its debt. Stability. These top 3 holdings are by design to keep this new ETF from appearing too volatile in its infancy. ARKX holds a smaller position in Virgin Galactic, 1.95% weight, along with 38 other holdings as of last Friday. We are big fans of Cathie Wood and the entire ARK Invest team of analysts. Their research transparency has allowed all of us to learn so much, especially those of us who love investing in the future. Cathie built a massive following after ARK Innovation returned nearly 150% last year. What a year that was. 2021 has been different though. Her flagship fund, ARKK, is down nearly 5% this year. Why? That's a very fair question. There's been a recent rotation out of technology and growth names into value stocks, the Warren Buffett type stocks. These moves are coming from the pressure of rising interest rates. So what does ARK do in times like these? They often buy the dip in any of their top holdings, which are all high conviction names. They sell the lower tier names and rotate into the highest conviction stocks. The concept of a space economy through travel, exploration, connectivity, and GPS has gained a tremendous amount of attention over the past several months. Elon Musk and SpaceX has captured everyone's imagination again about the frontier of space. Many space names received a rocket boost in their prices when the possibility of ARKX was announced, and while the sector has since cooled off a bit, we think it's likely that these space-related names will start to pick up some steam over the next several weeks. We've said it over and over again like a broken record. What makes ARK particularly attractive is its focus on disruptive innovation. That investment style would give both Warren Buffett and Charlie Munger heart attacks. But the investment landscape is changing, and the ARK team has proven to be ahead of the game in terms of growing our money. Stocks don't always go up, and new investors have to get used to the rotations. We own some value stocks, sure, but we're trying to grow our money at this stage of our lives, and innovation will always do that faster than value stocks. To prop up that point, think about how fast Elon Musk built his wealth working on disruptive innovation companies like Tesla and SpaceX versus Mr. Buffett's much more conservative approach investing in Coca-Cola, railroads, banks, and such. Elon is the second richest person in the world now, while Mr. Buffett is number 7, and Elon did it decades faster. Think about that. Let's take a look at why this is the right time to buy ARKX. Number 1, NASA's fastest and most ambitious rover so far, Perseverance, landed on Mars in February after a 7-month-long journey. The Occupy Mars movement is real. Number 2, Jeff Bezos announced that he would step down as CEO of Amazon and devote more of his time and energy into passions like Blue Origin, his space company. Google says he's worth $193 billion. Tesla and SpaceX main man, Elon Musk, is now reportedly worth $171 billion. These two entrepreneurial giants are elephant hunting. The global space industry could generate nearly $1.1 trillion or more by 2040. That's significantly up from roughly $350 billion in 2018, according to Morgan Stanley. Bank of America estimates the space economy to grow to a whopping $3 trillion by that time. In a recent CNBC interview with ARK analyst Sam Koros, he made some interesting statements about ARKX launch. We've all seen the memes going around on Twitter, he said, acknowledging public skepticism of ARKX's holdings. The fact that people are dismissing this out of hand is very reassuring to us and kind of demonstrates the type of research that we're doing and how we can be unique, he added. Koros gave this example of Netflix, which has 1.25% weighting in ARKX. Why Netflix? So many have been asking. Netflix has 200 million paying subscribers. In the United States alone, there's over 40 million people who don't have access to broadband internet. And so, if a satellite solution can bring access to these customers and expand the addressable market and the top line for Netflix, then this is something that is very important, Koros said. Aha! Now we can see their angle here. While none of the 7 SPACs that recently announced mergers with space companies are in ARKX, Koros noted that ARK is constantly evaluating these companies. I think with SPACs, it's important to remember that a lot of these are almost at pre-IPO stage, Koros said. We really want to be sure that we are picking winners long term, particularly in aerospace, where many companies do go bust and things get delayed. Cathie Wood was interviewed by ETF.com about ARKX and also said some powerful things. ETF.com asks her this: what's the opportunity in space exploration as an investment theme? Here's exactly what she said. Space exploration sounds like a very big idea, and it is. It involves the convergence of more of our platforms and technologies than any of our other themes. We're talking about rockets and robots, mobile connectivity, 3D printing, robotics, sensors, deep learning, artificial intelligence. We rarely see the convergence of this many technologies. The 2 biggest growth opportunities in this space are, in first, mobile connectivity. We'll be able to serve the half of the global population that doesn't yet have mobile connectivity. And second, hypersonic flight. Think of being able to fly from New York to Japan or Australia in, say, 2 hours. The Concorde didn't make it for the reason most technologies don't make it. Costs were way too high and the technology wasn't ready. But now the cost associated with all kinds of technologies, including rocket and satellite launches, antennas, and the rockets themselves, have reached a level where all this is going to become possible. A lot of people think about the opportunity of us flying to the moon. Within my lifetime, I hope that happens. Many people think about space tourism, but we think the first and best opportunities are going to be mobile connectivity and hypersonic flight in the next 5 years. We've been telling our clients and anyone who would listen that for our kind of strategies, you need a 5-year time horizon. We go through a period like the coronavirus where we had no idea how it was going to end. We took a point of view early and we learned into it, became very aggressive with our strategy, concentrating our portfolio toward our highest conviction names. That worked out really well, Cathie said. In the last month or 6 weeks, we're seeing an acceleration toward the value in more cyclical stocks at the expense of our kind of stock. And after nearly 150% appreciation last year, to be down 10% this year doesn't shock us. But here's why we're taking comfort in what's happening right now, our 5-year time horizon. At the peak in February, the compound annual rate of return we were expecting from the stocks in our flagship portfolio was 15%. Our stocks have done a lot of heavy lifting. They're still going to deliver 15% according to our estimates, but we're getting close to dropping below 15%. We were taking profits from a lot of stocks that had dropped well below that 15%. Today, after the correction that we've been through and the way we've been reoriented with the portfolio, we believe the compound annual rate of return from our portfolios for the next 5 years will be closer to 25%. We're as excited as ever. So you can now see from these interviews, and companies like Rocket Lab, Momentus, and Black Sky are being watched closely, and over time, we do believe that they will be added to ARKX. Cathie and company bought Amazon, Google, Alibaba, and JD.com and placed these companies inside ARKX because they see increased sales as internet connectivity spreads across the globe. That will happen, and that's a great strategy. These companies will see revenue increase and the stock price go up. We also saw lots of criticism from the John Deere pick, but what people are missing is this. The agriculture business is going to greatly benefit from all the satellite information. John Deere will see sales increase as the countries continue to feed the world. If you're still with us, you are amazing. Give us a thumbs up and subscribe and ring that bell so you never miss a new video. Earn more, save more, invest more, and give more. And remember, if you're not interested in your money, someone else is. We'll see you on the moon.